Hi, everybody. Thanks so much for joining us for what I'm sure is going to be a really insightful panel over the next 40 minutes to talk about regulatory, policy, and market evolutions and insights in the fintech sector. My name is Steve Baums. I'm the president of Allen Advocacy here in Washington, and I'm joined by three very distinguished panelists who will share some of their expertise and insights over the next little while here. Before we get into the substance, though, I'm hoping that each of them can take a little bit of time to introduce themselves and their company, and then we can get into some of the hot topics that we're going to chat about. So first and foremost, we have Jeanette Quick. Jeanette is the head of compliance and public policy at Gusto. Jeanette, maybe I can turn it over to you and ask you to introduce yourself and Gusto to everybody.
Sure. Thank you for having us, Stephen. Gusto is a small business platform that empowers more than 200,000 small businesses across the country. We help businesses onboard, pay, insure, and support their teams. We offer a diverse set of services to small businesses, including payroll, health insurance, 401k, 529, and financial services. And as Stephen mentioned, I'm the head of compliance and public policy, and I've been at Gusto for about 3 years. Thank you.
Thanks, Jeanette. We also have Chris Hamilton with us. Chris is the Chief Operating Officer at Amount. Chris, maybe I'll turn it over to you to introduce yourself and Amount.
Perfect. Thank you, Stephen. Jeanette, Stefan, looking forward to the discussion today. Real quick about myself, I've been banking most of my career, 25 plus years of banking experience in product, risk, analytic, operational roles across every retail product that's out there from a consumer perspective, primarily at top 10 banks. So very regulatory centric, knowledgeable, and obviously a core competency of those organizations. I work for Amount. I've been in Amount just over 2 years. What Amount does is we really look to enable the banks to compete with the fintechs, really looking to simplify and accelerate the digital banking, digital lending, and we provide the banks the end-to-end technology infrastructure to enable them to go head-to-head with the fintechs, deliver the right consumer experience, manage risk the right way, and then manage the identity fraud risk along with credit risk. So, Stephen, back to you.
Appreciate it, Chris. Thanks. And last but certainly not least, we have Stefan Slattery, Demand Generation Lead at VGS. So Stefan, let me pass the baton over to you to introduce yourself and your organization.
Appreciate it, Stephen. Likewise, equally as excited, Chris, for the session today. As Stephen said, my name is Stefan Slattery. I lead the marketing efforts here at VGS for all of our compliance solutions. I have a particular emphasis on payments data, PCI, SOC 2, GDPR, HIPAA, essentially the protection of any payments data, PII, PHI. That's essentially my purview. And a little bit more about what VGS is. We're called Very Good Security. It's a little bit of a pun off of pretty good protection, pretty good privacy. And VGS is actually what we like to call on a mission to secure the world's data. And we do that through what we call a zero data approach. And essentially what that means is we empower companies to turn the burden of their sensitive data into a business value, in a business opportunity, by not having the compliance burden, the risk of storing that data themselves. They get the opportunity to create more business lines without added friction. They increase their product innovation, their time to marketing. They can run all of the things that they need to do as analytics, segmented marketing, fraud reduction, etc. They can do all of that stuff without actually holding any of that sensitive data. That's all actually stored in our encrypted token vault. And we work with any of the third-party vendors and third-party endpoints that our customers and clients need to exchange that data with, so that their business workflows are uninterrupted, but they have no data liability. So super excited to have this talk. I know there's a bunch of great things that we're going to talk about with embedded finance. So yeah, let's get going.
Thanks, Stefan. So, when we were chatting a few days ago, we really dove right into all of the trends that we're seeing in embedded finance and fintech and what to expect in the policy realm and what regulators may or may not do. And there was a fundamental question, Chris, that you flagged for us that's probably worth considering. And given your background both on the banking side and then now the kind of fintech side, I think it makes the most sense maybe to ask you to address this first. And I guess the question is, how did we get here? Why is embedded finance a thing in the first place? And what is the value that it's providing to customers that got us to this point?
Oh, thank you. Great lead off. Let me jump right in. So fundamentally, I think embedded finance has risen because financial services organizations are actually not effectively meeting the needs of the consumers. And I think that's especially true for the younger generation, the millennials, the Gen Y, where they are not big fans of credit card products. They don't like the high interest rates. They don't like all the late fees. So it created an opportunity for other organizations to come in with a superior product for the consumer that really enabled them to meet their needs. When I say meet their needs, it's really around a couple things. One is obviously they want a relatively low cost means of transacting. Cards are known for their high rates, high fees. That's obviously adverse for the consumer. But maybe even more important than that is the ability to actually manage your cash flow in a very effective manner. I know I'm going to have the split pay product, kind of the typical BNPL product is paying for. I make one initial down payment. I know I make 3 subsequent payments every 2 weeks over the next 6 weeks. So it's a very simple product. It allows me to budget, ties out with how most people get paid in the marketplace today, i.e. every 2 weeks. So I think fundamentally that's what's occurred. And that's the value that these organizations, these fintechs, have brought to the marketplace for consumers.
I think it's really interesting. I think the most, emphatic point of that is traditional banks, credit unions, the legacy institutions just weren't there for the people when they wanted it. And all it took was one fintech to say, hey, wait a minute, like, why do late fees even exist? And then essentially it forced the hand of all of those legacy providers. And then I think we saw a domino effect of, wait, if all it took was to reduce or eliminate fees to make the whole industry move, everybody else that had a good idea, like we have a couple of customers that do really interesting things with their, financial products, one of which is very much focused on sustainability and the environment. So, you get to choose what your, let's call them roundups, or, you get to choose what your swiping of a card actually does. Like, do you want it to plant a tree? Like, do you want it to do something else for the environment? And it's like, it's those, alternative solutions that, just as Chris said, like the millennials and the Gen Zs, like we're so obsessed with corporate social responsibility. And like, that's a tangible thing that they can do, that they are actually making a difference in using this specific card from this specific company to achieve this specific outcome that they're passionate about, that none of the legacy institutions were probably even thinking about at the time.
Yeah, I 100% agree with everything Chris and Stefan said. I think there's a lot on the consumer demand side that has really kind of helped us get to where we are. One other thing I'd add in is that I think that the verticalization of finance, as we're seeing non-financial companies get into financial products, it really unlocks opportunities for consumers to have a more seamless experience with finance. We're seeing, as consumers are able to make payments, purchase goods, or set up savings accounts, et cetera, through non-financial platforms, it really just creates more opportunities to basically interact with the financial system without really thinking about it, right? So, people don't have to go to third parties for finance options, and that really, I think, feels more understandable and more frictionless to a lot of consumers. And so it's kind of like the genie's out of the bottle, I think, in terms of increasing consumer demand for that type of a system. And not to kind of hawk the Gusto platform too much, but on our platform, for example, it's primarily the people interact with our system for payroll to look at their pay stubs, make deductions, things like that. But you can also open a bank account and take out a loan, save for retirement, and so it really helps someone be able to see kind of their full picture in terms of employment, their interaction with their employers, but also be able to focus on their personal finance at the same time. And that's something that's, I think, a unique experience and an example of how embedded finance can unlock opportunities.
And Jeanette, I want to you said the genie's out of the bottle. I think that's absolutely 100% true. Obviously, regulators and policymakers have taken note of the fact that the genie is out of the bottle. So to kind of take us into the realm of regulations, policy, consumer protections, just high level, I'd love if each of you could maybe share with us, what do you think will be kind of the key area of focus for policymakers in this space over the next year or so? Key policy initiatives, key areas of enforcement, if Congress or state legislators are thinking about anything, just what are the things as you think about policy involvement in embedded finance and fintech that you think we're going to see some action on in the next 12 months or so? And Chris, maybe I'll ask you to start this one as well.
Okay, perfect. Thank you. I think there's probably, I would say, one probably overriding area of focus from a regulatory perspective. And I think that's really ensuring that the consumer is not overburdened and that they actually have the ability to service the loans. And I'll say loans in quotes for BNPL because technically they're not loans. But I'll think they will want to focus on ensuring that the consumer has the ability to actually service what they're signing up for. Now, I think every individual firm is probably doing a rational job of how they manage exposure at a consumer level and ensuring the consumer is not overextended. But you can have multiple accounts, and it's very easy to get overextended if there's no central source of the truth around a consumer's overall exposure. So I think that's going to be kind of the overriding theme. I think they'll want additional clarity in addition to like the ability to service debt or ability to pay. I think they'll also focus on the clarity of the communication around any fees, any costs associated with the product as well. They'll want absolute clarity there on the part of the consumer, similar to what you see today with the Schumer box on the card side. So it wouldn't surprise me at all to see something similar come down the pike.
I think I'll take this from the business standpoint. Sorry, Jeanette. I'll go super quick. VGS, we obviously we have a moral obligation to end users, right? We want the clients that we work with to have the best interests in mind for their end users. So while we may not have a firm standpoint on consumer protection, I think for me, what the policy initiative or like the regulatory landscape looks like for me, hopefully centers more around standardization around the protection of data. We've been relying on PCI for payments data for 20 something years now, and we just finally got the update to the PCI framework last month. And then I think HIPAA from a PHI standpoint is good, but we don't really have a US equivalent to something like a GDPR, right? Essentially every company in the States is abiding by GDPR or some variation thereof, but we really are leaving it up to the states to develop their own kind of disparate regulation. And for VGS, like, we would prefer there to be a standard framework that all of our clients could abide by, that obviously makes their journey to general availability easier, gets them to market faster. So for us, like, the removal of friction is probably the most enticing thing that we're thinking about, in the coming years. What that removal of friction looks like, hopefully it's more standardization around, some of the protection policies. I know that more is happening now than, had been in previous years. A lot of work's going on, on the Capitol and in the White House with establishing, teams to look into cybersecurity, and we're excited about that. We want to see what happens from there. But certainly for us, bringing this full circle, like if we're talking about fintechs and embedded finance, the idea of frictionless fintech, we are essentially taking the responsibility on ourselves and creating an application that will future-proof our clients, regardless of how many states introduce their own disparate regulatory framework. So we're doing everything that we can to make the client's job a little bit easier in getting to market and satisfying those security controls. But certainly we're interested to see what's going to come at a country level here in the States and replicate what's going on in other places.
I'll just add in a couple more thoughts. So one of the things I left out of my bio is that I started my career at the OCC, the Office of the Comptroller of the Currency. I also worked at the Senate Banking Committee, so I'm a big regulatory nerd, and I've been closely following a lot of the regulatory and policy developments. And there's a lot to, I think, digest these days. There's been a lot coming out of the regulators. So a couple that I'll focus on. So Director Chopra at the Cfpb, he's recently been signaling a lot of interest in different areas, one of which is evaluation of digital redlining, I think, which will be, kind of important for all of us in the tech space. So they're taking a closer look at financial institutions and fintechs and how they're using algorithms for lending decisions. We know from research over the past couple of years, just generally, that some algorithms have been shown to be creating or exacerbating biases or existing disparities, and CFPB has flagged that this is an issue that they'll be looking at. So I think we're certainly following that to kind of determine what next steps are. Both the CFPB as well as the banking agencies, will be looking to adopt fair lending laws to account for those algorithms, which I think will be interesting for those of us in the tech space and in the financial space really generally. We are also watching the earned wage access space. These are products that can provide consumers needed access to earned wages. Sometimes they can come with hidden fees or terms. And a couple of months ago, the CFPB signaled that it would be taking a closer look at these products to determine whether they should be considered loans under the Truth in Lending Act. I know many players do not consider them to be loans. Gusto currently has an offering called Gusto Cash Out, which is structured as a loan and provides our user base an opportunity to access funds based on estimated wages. So we'll be following that. There's been also a lot of state action on earned wage access. And then finally, just wanted to mention something that was really timely. Last Thursday, the OCC, the Federal Reserve, and the FDIC issued a joint proposal on the Community Reinvestment Act and potential kind of regulation of neobanks and fintechs and application of CRA in kind of new chartered territory. So that will be certainly something we're also following as well.
That's great. Thank you all.
Hey, Steve, so Jeanette, it would be great to connect offline, given that background. And I did want to follow up and add one thing actually two things. One is when you think about assessing a consumer's ability to pay, you actually have to have a central source of truth. And that is one of the challenges that's out there today. Obviously, with other credit products, it's all reported to the credit reporting agencies. Everyone can access it. That is not the case with many of these BNPL loans. So I think that will be kind of a corollary to establishing ability to repay on a go-forward basis. The second thing is, and maybe Jeanette, since you brought up the verticalization, maybe shoot it back over to you. Does the actual verticalization of financing actually do enable some redlining to a degree, from just a way the financial services are embedded in the offering? Like if I think about doing home improvement lending, it's obviously going to reinforce what's already present from a biases perspective across the industry when you're betting in a vertical platform and you're just doing lending to homeowners.
Yeah, I think that's a good question, Chris, and also certainly happy to connect offline too on OCC stuff. But yeah, I mean, I think I think that this is kind of almost like a broader question about use of data, right? And I think a lot about the how something like the Fair Credit Reporting Act should be modernized, right? Where like it's actually very limited in terms of what consumer data comes into the definition of FCRA in terms of data that consumers can ask to see about themselves or to dispute, right? Like that's kind of the fundamental pieces of FCRA, but it really doesn't accommodate or account for the vast use of data today, right? And so there's kind of like these fair lending considerations. And that certainly comes into play, I think, with verticalization. But there's also just this broader question around how are companies using data about somebody. So some of it might be your own platform data, or maybe it's data you're pulling in from all kinds of other sources. Or I mean, for example, for Gusto, we have employer data, right? We have a lot of information about what somebody's employer is kind of up to and how they're doing. And I think that's an interesting regulatory question is how should data be used about you, even if it's not your kind of data, right? Like it's data that may be somehow in your ecosystem, but it's not actually data that you as a consumer have somehow, opted into or have control over, right? And how should we regulate that? And that's a really interesting question.
Jeanette, let me pick up on that thread if I could. So the theme from this conversation is there's innovation happening in the market, and it's outpacing the ability of the regulators to act quickly. And now the regulators, through no fault of their own, are trying to evaluate in a more kind of thoughtful, deliberative way, what do we do now that the genie is out of the bottle to make sure that consumers or small business owners are protected? So, Chris mentioned some potential areas where we might see activity in the BNPL space. I wonder for you, given your background and your role now at Gusto, head of compliance and public policy, how do you kind of balance the two kind of, in some cases, countervailing pressures? On the one hand, innovation and bringing tools and products and services to customers that can meaningfully help them, in Gusto's case, build, scale, manage their businesses. But on the other hand, making sure that there is compliance with an ever-changing, somewhat ambiguous state of regulatory and policy expectations.
Yeah, great question. So we really start by thinking about what the compliance requirements are and having our legal and compliance team work hand in hand with our product design and development team very early on, so that we can kind of think about how to strike that right balance every step of the way. So I will advise our team what is or isn't required from a compliance standpoint. And to your point, some of it is gray area, but a lot of it isn't, right? Like it's very clear on some particular offerings that, there may be a disclosure that's needed and it needs to be a certain font size, it needs to be visible, it needs to be prominent, right? Like some things are very are not gray area, right? And so I make sure to really surface those things that are kind of hard baked, and make sure that the designers and product developers know about those, and I review the designs, product flow every step of the way. And we also work to make sure that that the user experience is one that makes sense. It's easy to understand, works well with other products on our platform. And I guess this is kind of relates to the verticalization piece, right? Which is that the way that a product on our platform may be surfaced may look very different from on another platform because of the fact that users primarily come to our platform for payroll, right? They're clocking in and out, they may be tracking hours, checking out their pay stubs, signing up for health benefits. It may, it's not going to look like a bank website does, right? Because there's other offerings there, and there may be kind of other things we want to make sure people are understanding, things like their pay stubs, right? That are not just financial products. But we can also use the platform and our kind of whole suite of offerings to tailor how we're thinking about the financial services offerings to people, right? And there's not really like regulation in terms of how that's done. It's more like, how do you make sure that it's understandable and clear? So for example, we might use behavioral nudges to promote financial wellness. If somebody receives a pay increase or bonus, and we know that because we have that information on our platform, that might be a good time to ask them if they want to set aside extra money for savings, right? And we have a savings, we have something called savings goals, which is a bank account where they can put aside money very easily. And so that's something that, I think is a good example of, we're offering a compliant product. It is, has all the disclosures needed for a bank account, but it's also thinking about how to be innovative, how to provide consumers choices and kind of help them understand, how they can very easily, meet their savings goals or use, opportunities like a bonus to be able to meet those goals. So we focus on that, kind of all the time, the human-centered design, making delightful moments. Delight is a word we use a lot here. I think that's common in tech, but we use, making delightful moments for people to improve financial health, while also making sure that we're keeping compliance top of mind.
And on a related note, so Stefan, maybe I'll turn this one to you. As consumers or small business owners are interacting more with their finances through their phones or online or digitally, I think the number one concern that we hear from policymakers is security, safety and security, whether that's data security, cybersecurity, fraud, across the board. So, given your and your organization's focus on security generally, can you maybe talk to us a bit about what your customers need to be aware of or concerned about when it comes to security, and how security needs to be top of mind, and what consideration should be given to security as innovation continues to grow at scale?
Yeah, for sure. I'm actually gonna take 60 seconds to piggyback on Jeanette's last question, because we look at this very seriously from our standpoint. We architected our solution in a way that allows a company to approach us for one use case. Let's just say it's a neobank and they want to open, do open banking, but then they also want to then offer some type of a card, but then they also want to offer some type of a lending, product. The idea of future proofing what somebody's wants and needs and introducing new lines for revenue, et cetera, et cetera. We're trying to make sure that people can introduce the products that their customers are asking for and that their customers need, while also remaining compliant from a PCI standpoint. Because if somebody approaches us and wholesale uses the VGS zero data platform to achieve PCI level 1 compliance, they get to use our attestation of compliance, so that when they need to go and essentially ask to add a new line of revenue, let's say lending, let's say a credit card, and they need to approach a sponsor bank to introduce a card, etc. They've already done all the legwork, or essentially 90+% of that legwork needed to introduce that added revenue line, but they've already had the security first, zero trust principle, zero data platform behind them, so they're already compliant from the get-go. So it's a little bit of a dichotomy. Jeanette, you're looking at it from the moral obligation and doing everything in the best interest of that user, just like you said, those subtle nudges to make sure they're putting away savings. Like, I actually I don't have a Gusto account, but I do love those little nudges, because it is just something that keeps it at the front of my brain. And I think we can all feel the same way. Like, we enjoy those types of delightful moments when we're interacting with these products, because you do feel a little bit of a human connection, like a morality there. So yeah, I wanted to take, that was my shameless plug, if you will. But if we turn into the security mindset, for anybody who was either watching the recorded sessions from the FTT show in London back on April 26th, or was there, they've probably heard me say this. When we look at what clients, customers, prospects, essentially anybody needs to be thinking about as it pertains to data security, like, fintech products are awesome. They're doing amazing things that didn't even exist 3 months ago. But at the core of every fintech product, every super app, every embedded finance product is data, right? It's collecting data, it's exchanging data, it's exchanging it with third parties. We're in a place where there's an ever growing, disparate tech stack. And for us, when we're talking to companies coming out of accelerators or incubators, we really stress that data security should be at the core of what they're planning for, and addressing those things as early on in your architecture planning stage sets people up for success. Because the last thing that you want to do is create an amazing product, connect it to 5,000 different things because it does so many amazing things, and then have to reverse engineer what your security posture looks like, and finding all of the evidence, and plugging any leaks or where data might exist. So that's definitely one thing that we like to stress is be security first. Think about things holistically, as far upstream as humanly possible, and you need to be confident in adopting that security first mindset from the get-go, and disseminating that to all of your employees, because I think, again, going back to this moral obligation, it's on all of us, including us on the call, including the clients that we work with, the clients that you guys work with. It's on all of us as solutions providers to do everything that we can do to protect end users' information, because when we're exchanging it, from a business to business standpoint, we just think about it as data. It's my, process workflow, this just has to work. But in reality, that's somebody's identity, that's somebody's retirement account, that's somebody's entire life that is, collected in a little string of tokenized characters. So I think we kind of get lost in the sauce, if you will, a lot of times when we're talking about the exchange of data, and we just kind of anonymize that. But everybody's a human, and you have to think back, like, this could be my bank account number, this could be my credit card number. So that's really what it boils down to, is think about security, prioritize it really early on, and then embrace any kind of modern guidelines that need to keep up with open banking, embedded finance. I know we're going to talk about crypto hopefully in a little bit, but like, embrace what is coming, just because things are changing so quickly, and a lot of this stuff we just don't know what we don't know yet.
So, Stefan, I want to keep on that theme, and I'm going to ask everybody to chime in on this. But there's been this conversation over the last half hour or so about, policy changes are coming. The pace of change and innovation is moving ever faster. So, high level, as you think about where regulations are in the embedded finance or fintech sector versus innovation, do you think we've got that balance right now? Or do you think it's off kilter in one way or the other? Stefan, I know you mentioned, for example, a federal data privacy regime as one way that you could think of putting that balance back in place. Are there others, or do you think we generally have it right? And then Jeanette and Chris, I hope you guys will chime in as well.
I don't want to make a blanket statement that we generally have it right. I think there's always areas for improvement, for sure. I think one of the interesting things that we talked about internally, myself and one of our product managers, is that when the market is unregulated, all of these embedded finance products, the fintechs, et cetera, they flourish because they know their product best. They have this vision, and they're free to architect it and develop their product as they see fit and achieve whatever their outcome is. They're free to innovate, they're free to develop without barriers. And then when regulation comes, if a company hasn't set themselves up for success, right? Again, I'm talking through a data security and a compliance standpoint, that innovation can come to a screeching halt if they haven't done all that due diligence ahead of time and they haven't architected their product to be a security first, product. So it's tough. I'm in favor of regulation, right? Because I think that always more can be done, but we also don't want to stymie the awesome things that we're talking about and the great things that we saw at the FTG show in London. Like, there's a lot of amazing things happening that are really pushing the envelope and changing a lot of stereotypes on how, legacy banking and lending is, and access to, financial products and financial education. So it's tough. Like, I want to see more standardization, but I want to continue to see all these great things that, FTT and VC Innovations and everybody else on this call, gets to show us.
Chris, maybe I'll pose the same question to you as somebody who spends a lot of time working with banks. We're obviously very heavily regulated.
Yes, very heavily regulated, both on the consumer side as well as on how vendors are managed, how data is managed, how you secure your overall infrastructure. In general, I think the regulation will always lag innovation. It's almost, you don't know what to regulate until something's been innovated, right? And the innovations, as we talked about earlier, there's a lot of positive aspects to the innovation that's occurring, but there's always a tail that you have to make sure that you're appropriately managing the kind of the public risk, if you will, around the innovation. To Stefan's point, also, I think there are situations where the regulators can go too far, and there really does have to be an appropriate balance there, where you're weighing the regulatory burden that the innovators, the banks, the fintechs have to execute against versus the consumer harm that is potentially out there, and striking that right balance. It's easy to say it; it's a lot more difficult to actually execute on that and strike the right balance there.
What do you think here?
Yeah, I think Chris and Stefan both made excellent points. Not to kind of pile on with the same ones, I think something else I'll just mention is that it feels a little bit like in the past, decade, as we've been in this post-Dodd-Frank world, and as we've seen a lot of, growth of fintech and non-financial companies, that we've seen quite a lot of uncertainty across administrations, right? So from administration to administration in terms of the level of supervision and enforcement of fintechs. So I think that uncertainty, I don't think it has necessarily stifled financial innovation. I think we still have a very robust, kind of innovative atmosphere and environment in the U.S. generally. I was actually just in Europe a couple of weeks ago, meeting with a bunch of folks about the European regulatory system, and everyone there is talking about how we have such an open regulatory system, and there's such an opportunity for innovation. So I think comparatively, I think even though we are heavily regulated, we still have a lot of opportunities, I think, for innovation. And arguably, I think more consumer-friendly products and services have emerged, over this last decade in this period of regulatory uncertainty, through competition from new market entrants. Lots of new neobanks, lots of then kind of impacts on traditional banks, doing kind of either doing away with things like overdraft fees or account fees, right? Like I think that the overall financial landscape has gotten more consumer friendly in the last decade, and that's kind of I think that kind of weighs in favor of there being a balance that has been struck fairly well. But I do think that it would be ideal, more ideal, I guess, to have clearer, more consistent standards of supervision and enforcement across administrations, as well as between state and federal agencies.
That's great. And we only have a few minutes left, so I'm going to ultimately end with a quick kind of round robin question. But before I do, Jeanette, I cannot resist asking about crypto because it's on everybody's mind and it's a hot topic in DC and elsewhere. So as somebody, again, who's in this compliance role, who has spent time in government, where do you think we are? Is it still too scary for kind of mainstream financial services and regulators at this point?
Great question. So I'll mention here, so Gusto doesn't have any crypto products, but I certainly have a point of view from a personal standpoint. I think there's a lot of really exciting stuff going on. You're right, we can't ignore crypto. I think I just saw polling from Pew a couple months ago that 1 in 6 Americans have either used crypto as a payment or as a kind of speculative store of value, which I thought was really interesting. So I think we've seen a lot of fascinating developments by governments, both in the U.S. and in the EU, and other places, to advance thinking around how to create a robust regulatory framework for crypto. President Biden's executive order, the EU Central Bank Digital Currency Initiative, are examples of this groundwork being laid. But we're in really early stages, I think, from a regulatory standpoint. I mean, I think it still feels like a little bit like, it's on the private sector side, it's a little bit Wild West, and there's a lot of, I think, questions that still exist in terms of, kind of overall or kind of end user value, I guess I'll say. But, on the regulatory side, the executive order directed more than a dozen agencies to study the issues and make recommendations for legislative changes. So, I mean, those of us that have been, working in and around DC for a long time know that's a very long process, right? Like if we're first doing a study, then we're making legislative changes, recommendations, and then it's the legislative changes. That's a multi-year process. So I think we're really at the beginning. We're really at the start line in many ways. And I'm super curious where it goes.
Great. Well, in our last minute or so, I'm going to give each of you a magic policy wand, and I'm going to ask you to wave it. And maybe, like 30 seconds each. We're having this conversation 1 year from now, hopefully in person, and we're looking back at the previous 12 months. You're only able to use your magic policy wand once. So what will you have used it for, and what's different 12 months from now as opposed to today? Stefan, maybe we'll start with you, then we'll go to Chris, and then Jeanette, you can close us out.
For sure. 30 seconds, wow, it's tough. So I think, again, like going back to wanting to strike a balance between, regulation and innovation. As I said before, we've been reliant on the PCI framework for so long to regulate payments data. And I think we all, thought it lagged a little bit too far behind. So I'm really interested to see what's going to come of even like, let's call it like neo frameworks, if you will. Just as an example, Plaid introduced the OFDSS framework to deal with like modern open finance, modern embedded finance. And we're a partner with Plaid in that framework. And again, like what Jeanette said, we're in the really early stages. Like this is a brand new framework to complement what we've done for protecting payments data. I think the idea of super apps and just wondering where that data is going and all the different things that it's connected to, like, hopefully we will see more, innovation and evolution of frameworks like this to try to fill in those gaps of where is all this data going and who actually owns it, who's the custodian, who's responsible in a breach situation, and just have like a more robust idea of what that looks like with modern tech.
I can follow real quickly. As you guys know, banks are very risk centric. You could even say risk averse, and any different interpretations of regulation obviously leads to risk on the part of the bank's perception of risk anyway. So if I could wave my magic wand, it'd be consistent regulatory guidance around BNPL lending, how it's going to be managed so that everyone's held to the same standard, and the banks can kind of put that to the side and say, hey, how do we evaluate this business on a go-forward basis, and how do we meet our consumer needs on a go-forward basis?
Yeah, and I'll just pile on a little bit to Chris's comments there, which is I would love to see the CFPB give a clear indication of how it's thinking about viewing and regulating earned wage access. Many states are moving ahead. We have New York and California in particular. There's many other states as well, which has the potential to create a lot of questions, I think, in terms of if there's different standards and reporting across states. So that I think would be really helpful if I had a magic wand. And I want to get in my second magic wand ask, which is more development on the use of data and algorithms, as we mentioned, I think earlier in the session. But I don't think this one will be done by this time next year. I don't think that's possible. But as we mentioned, there's a lot of fair lending considerations, privacy, credit reporting, lots of questions about use of data. And I think the regulators can really do more to guide the industry into a more responsible use of data, or at least what they think is responsible, and to provide consumers also more understanding and control over how their data is used. And I think that would be really, revolutionary for the regulatory system.
Well, look, I think we could have taken any of these topics and spent like 4 hours on each of them. So thank you all for your insights and your perspectives. This was a fascinating conversation. I'm looking forward to speaking 12 months from now and seeing where we were right, where we were wrong, what was different. But more than anything, really appreciate your time in this conversation, and hope everybody enjoys the rest of the conversations that they can watch through the rest of this conference.